Good afternoon and welcome to the workshop From Green Bonds to Green Home Loans, How Edge Gets You There. This workshop is brought to you by API Events and IFC Edge. My name is Kfir Ruzen. I'm the Managing Director of API Events, and I'm pleased to welcome you today to this important discussion. We have a number of key decision makers on our panel, ranging from banks, developers, to also listed funds, and we look forward to driving the discussion forward. We are pleased to confirm over 300 registrations for today's session, which obviously shows the demand for this topic, and we look forward to engaging with the panel. Before I hand over to Lenore, who will be driving today's session, she'll be starting off with a presentation and then moderating us with the esteemed panel. I'd like to just remind everyone that you're encouraged to ask questions in the chat. We will then share these with the moderator and then be put forward to the panel. So please engage, please make comments, and then we'll take these through. So on that note, I'm going to hand over to Lenore from IFC Edge. As I mentioned, she'll take us through a presentation and then also introduce the panel. We look forward to the session, and over to you, Lenore.
Thanks, Kfir, and welcome everyone. Great to be with all of you. So today our topic, as Kfir said, is this is a green finance workshop because we found that from our IFC team, we've had a lot of interest around green finance, around green financial products, and also around how Edge, our green building program, supports you on that journey. So I'll just take you through an introduction to our program for those of you who may not be so familiar with it, just to give you an overview. So Edge is an international green building certification system. It's an innovation of IFC, and IFC is a member of the World Bank Group. And this certification system was created to be able to make green buildings more accessible around the world, especially in emerging markets. We have a number of different building typologies, from hospitals, industrial warehouses, offices, retail, hospitality, education, and homes. Especially across Africa, one of our biggest building types has been homes, especially in South Africa. Projects can be certified all around the world. And you'll see there are quite a number of projects that have been certified across Africa, in Ghana, Nigeria, Cameroon, Cote d'Ivoire, Kenya, Madagascar, Zambia, Angola, Namibia, and South Africa. The EDGE program in Africa started in South Africa in 2015, and we've expanded across the continent. So how is EDGE different from other certification systems? There's the EDGE brand that has international acclaim, being an international standard. We have a freely available Edge software that allows you to calculate what the cost of going green is, and also what the savings would be of implementing green building measures in your building. We focus on resource efficiency, on energy, water, and embodied energy within the materials. The Edge software is adapted to your local climatic conditions. So we have a bioclimatic modeling, and it's also a streamlined process. There are 3 levels of EDGE certification. The level 1, which is EDGE certified, which means that you've achieved 20% more savings in energy, water, and embodied energy than the baseline standard in your country. It may be your national building code, for example, in South Africa. EDGE Advanced means that you've reached 40% energy savings, and zero carbon, which is level 3, is EDGE Advanced with 100% renewables or purchased carbon offsets. And EDGE is also aligned with various international green finance standards for green buildings, including ICMA, International Capital Markets Association, Climate Bonds Initiative, and more. This makes it EDGE the ideal certification for if you want to access international investors on the capital markets, such as when you want to issue a green bond, because EDGE has already been approved and is aligned with a number of these standards. And you'll hear more from some of our panelists about how they went through that process and how EDGE helped them. So with Edge, you can create innovative, low-risk financial products such as green mortgages. Because you have energy and water savings, it allows the home buyer to have more savings in their monthly income. So their available income is increased because they're benefiting from the savings of an Edge certified home. So it means that they could have a lower risk of late payments or loan defaults. It means that structuring a home loan for people who will be buying an Edge certified home could have some benefits from that perspective. On the capital markets, Edge can be used as a proxy in that green bond process, and it can help you to attract new investors. We found that some of our clients have been able to attract investors from that they wouldn't otherwise have been able to attract to their particular projects because they had this certification and they went into the market and they were able to attract investors who are looking for green assets, help them to expand to new markets. And for some, it's helped some REITs to develop new products as well. So now I will go over to our panel. And if I can invite our panelists thank you. So we have a great panel today. We have Sheikh Sananko from HC Capital Properties. We have Sheila Mora from Acorn, and we have Mfundo Mabaso from FNB. So I'd like, Sheikh, could you introduce yourself, please, and tell us a bit more about your company and about how you came to this journey?
Sure. Thank you for having me here. Thanks to IFC and to API for organizing the event. So my name is Sheikh Sanankwa. I'm managing partner of HC Capital Properties. We're a real estate investment and development company focused on West and Central Africa. So we have three different, I'd say, lines of business. The first one is the asset management business, which is basically private equity. So structuring and investing in projects. We have two big focus area in terms of asset classes. So we have commercial real estate that includes retail, a bit of hospitality, and then we have residential bits. So those are the core. And then we are opportunistically looking at other asset classes such as industrial, data center, etc. So that's the first line of business, is the asset management. The second is the development management business. So, you know, by the reality of the markets we're in, there wasn't enough, I'd say, structured developers when we started the company. So we've had to basically become a developer ourselves. So we created our own development capabilities, so including construction management, leasing, operations, back office, etc. That allows us to develop our projects. So that's how we've developed a couple of projects, including the main one we'll talk about today, which is a shopping center. And then the third bit is obviously, as you have commercial buildings, you have to manage them. And so we've done a joint venture with CBRE Accelerate to manage our assets on this side of the world, and that's the entity that basically manages the retail side of things. And on the residential side, we've have an in-house capability to manage the residential. So in 2016 we started the construction of a shopping center called Cosmos Yopougon. Cosmos Yopougon, in a nutshell, is built on a 3-hectare plot of land, 17,000 square meters of gross built area, 500 parking spaces, 14,000 square meters of leased area, and about 64 stores that are anchored by Carrefour as the grocer, and a number of other brands that you may know. So a mix of international brands and local brands like Burger King, Zeno, cinema, a kids play area, services, etc., etc. And so when we started that journey, we knew we wanted our building to be a sustainable building, and we knew we wanted to get certain type of certifications. So we looked at the different ones. So obviously we looked at the Edge, LEED, BREEAM, etc., etc. In the rush of everything, as we started the construction, we weren't actually able to submit the application and do the certification. So the team designed to the best of their ability the building, and so we went through the process. We opened the shopping center in 2018, and in 2019, as we started to stabilize the asset, we decided then to go and try to get the Edge certification. So we actually did it at the end, and as it turned out, the team did a fantastic job, because as we went through the software and entered the various requirements, we were able to pass the 20%, sometimes the 40% mark on the different criteria, whether it's water savings, energy savings, and the materials that were used. So we're able to get the Edge certification that way. So the credit goes to the technical team. And to us, this was a great achievement, because it meant that we're able to actually design a commercially viable building while also achieving some of these climate goals, and having an efficient and basically a green building. And so on the back of that, then we decided to take the next step, which was to try to access the green financing. And we had that in mind since the beginning, but obviously starting with a first green project was going to be difficult. So we knew that the way to do it was to finalize the first project, then refinance it, and then we'll talk about this maybe a bit later. Then going forwards, it should make it easier for us to then issue green project bonds. So the process from the time when we got the Edge certification, we had two options. Option one, we could do basically a direct bilateral green financing option with certain providers, or two, we could do a bond, a green bond. And when you do a green bond, there's a nuance whether you do a listed bond or a private placement bond. For a number of reasons, we decided to go with a private placement bond, but the process is more or less the same, because you're regulated by the CREPMF, which is the regulator in West Africa that manages all the countries of UEMOA. And from that perspective, we needed to get a rating, we needed to get a visa. A visa is basically the regulator going through everything and giving you the approval. And in order to do all of that, as I said, we did a proper credit rating by a local credit ratings agency. But we also needed to get the additional green certifications. And for that, we did another two things. So we needed to get a third-party opinion. So we used a company called DNV, which is a company from Norway. It's one of the largest classification company. I think they operate in over 100 countries. So they perform an independent assessment and verified us using the climate bond standard. So that's the first stamp that we received. It's an ISO 901 certification. And the second thing we did is we actually went to the climate bond and basically got the climate bond certification, which is one of the highest certifications you can get globally if you're going to do a green bond. So the Climate Bond Standard Board approved and gave us the pre-issuance certification. And that gave us the total wrap that we needed to qualify our private placement bond as a green bond. And that's what we used then to finally get the visa from the the regulator in Côte d'Ivoire, the CREPMF, and then from there, with the placement agent, we're able to market the green bond. So the green bond was actually oversubscribed by over 30%. And we couldn't sustain the demand. I mean, it wasn't a huge number. It was about $18 million for just that asset, but it was important for us because it allows us to kind of tap into the space. We had to educate a number of the regional institutional investor, because it was the first green bond in the region. So people had to understand what it means, what are the benefits, and people were very excited, and we ended up getting the full subscription from regional investors, actually, which we thought maybe we would end up getting a lot more of the international one, but locally, all the investors actually jumped on the opportunity. So sorry, I was a bit long, but maybe I'll stop there. I'm sure there'll be more questions later on this.
Thanks so much, Sheikh. And yes, definitely we'll be diving into that more. It's absolutely very inspiring to have the first green bond in Francophone and Central Africa on the back of an EDGE certified project. And I think what you managed to achieve was to refinance an existing project. And I think that's a dream for many developers. It's like, well, I can maybe get finance for my new project, but how can I get to refinance an existing project? So I think that's really an amazing story. And it's great that you're a pioneer in that area. So now we'll move on to Sheila. And Acorn has also been a pioneer in Kenya in terms of having the first green bond issuance. But your green bond was a little bit different because you went, yours was a publicly listed green bond. So maybe if you can take us through a bit about your company and also what made you embark on this green journey? What inspired you to take those steps?
Okay. Thanks, Lenore, and thanks to IFC and API. I'm glad to be here and looking forward to interesting conversations. As we've already started with Sheikh, I'm clearly setting the ball rolling. My name is Sheila. I work with Acorn Holdings. I'm currently managing the ESG function. So I'll give us just a brief snapshot of who Acorn is, and then I'll get into what inspired us to go the green bond route. So Acorn is an integrated real estate business. And we have three core functions, or rather three core capabilities: development management. So we develop our own properties and our entire portfolio. This is actually developed in-house through skills that have been built and capabilities that have been generated over time. Acorn has actually been in business for about 19 years. So initially doing project management, but then we went strategically into PBSA as an asset class in 2018 when we launched our student accommodation. So we do development management, and the key skills are basically the engineering bit of the project for the students accommodation, procurement, and also just managing the construction team. Then we also have another core capability, which is property management. And we've got fantastic teams within Acorn that handle this, so property operations. And then we also have the sales and marketing teams that handle basically the marketing of projects and the products once we are done to the various universities that we collaborate and that we work with. And finally, we just launched our investment management arm. That was towards the back end of last year. So now we actually have Acorn Investment Management Limited. And through this, we're able to raise 2 REITs early in the year, a development REIT and an income REIT, that we see as a future of how we're going to consistently fund the projects that we are raising. So that's basically about Acorn. What inspired us to go the green route for raising funds for our projects? So I think Sheikh did a good job in just explaining what the process for the green bond looks like. But if I might just go back a little bit. So a green bond is basically any financial instrument, a bond that is raised to exclusively finance projects that have environmental benefits, and that also align to the 4 core principles of the green bond principles. And I think Sheik talked about this a bit. So the 4 core principles are the use of proceeds, the management of proceeds, then project selection, and also reporting, which is a key critical requirement of the green bond management and program, and just the overall, view when you go towards a green bond route. So why did we go the green bond route? As a business, strategically, in 2016, we decided to have all our portfolios certified as green. And to be honest, at this time, we hadn't actually thought about using sustainable funding or green funding for the purpose of funding, and financing the projects. It was just that we thought this is the right thing to do. And for us, we are in it for the long haul. We operate the buildings, we hold the buildings. And so the advantages that come with life cycle costs savings, because you have a more efficient building, was a solid business case for us. So that's why we actually decided to have all our portfolio as being green. So we had actually our first project going the green route in 2016. For us, in terms of selection, again, as Sheik mentioned earlier, we've got several platforms available. We've got BRIAM, we've got LEED, we've got EDGE, but we chose to go the EDGE route because it's a very interactive and a simple platform that IFC has been able to create, which we were able to work through, and we had a lot of support from the IFC teams and the audit teams that IFC works with. And so for us, after looking and scanning through the universe of all the green certifications that were available, EDGE seemed like, what was more practical for us. And so we actually certified the buildings through the EDGE platform. But I think one thing that also attracted us to the EDGE platform as a route for certification is because of the local context. So EDGE actually has an inbuilt mechanism through which they actually bring the local context in it, in terms of the weather patterns, the materials that are available locally for construction, which has a big impact on your capital cost changes. And so for us, that's why EDGE was attractive, because then you're able to manage initially your CapEx increment, I would say, on a very controlled basis, because you're using locally available materials, local technologies you're using, and then the platform takes into account your local weather conditions. So that was a big thing for us, why we chose to go through the EDGE route. Finally, when we were going into the market to raise funds, we realized, wait, according to the 4 core principles, we need to have a green portfolio. We already had a green portfolio, with a strategic decision to continuously certify all our projects under the EDGE platform. So that is why we went the green route, because we already had a green portfolio. And so it was just about working through locally, with our partners, working with the regulators. We had a lot of support from CMA. We had a lot of support from the Kenya Green Bonds program. And so we were able to work together with all these parties and CBI, and then we were able to raise the green bond. For us, during the first raise, which was in 2018, we did have the bond oversubscribed, as Shika mentioned in their case, but we're able to actually have the bond at 80% subscription. We're able to raise 4.3 billion Kenya shillings, roughly about $40 million. We did have a second raise earlier this year, and the bond was actually oversubscribed. And I think for us, the biggest thing that came out of that is that with the second raise, we actually saw more local players, coming on board. And like the first raise, which had a mix of international players and also local financiers. So I really think that the green message is going in the right direction, and developers and financiers alike are also following through in the right way. So I think as a snapshot, that is what our journey has looked like.
Great, thank you, Sheila, and that's wonderful. That the first time you might have needed to educate the market more. So perhaps the response wasn't as enthusiastic as you might have hoped. But like now, the second round, it's great that you had that kind of oversubscription, and also much more from the local investors. So great, thank you. So our third panelist, Mfundo Mabaso, he's from FNB. He's the head for growth from the home loans team. And we've been in many discussions, Mfundo, over the years about FNB's interest and commitment to green, and also in supporting the local market to access green initiatives, green finance. So please tell us a bit more about FNB and your role there, and how this journey has been around green finance.
Thanks a lot, Lenore. Thank you for the invite. It's nice to know that both of us, the IFC as well as FNB, are members of the African Union for Housing Finance, and part of our synergy and our relationship has grown from that membership. And I guess where we found sort of convergence was on that basis. In fact, I'm hearing a little bit of feedback. I don't know if you guys can hear it on your side. Okay, cool. Yeah, so I'm Mfundo Mabaso, head for growth with FNB. FNB is a financial services provider operating in South Africa for the last 183 years. Has subsidiaries across the continent, 8 of them, and we found ourselves sort of having to traverse different revolutions along the way. And I guess when the Green Revolution came about, we were first to market, and we said, okay, cool. So how do we get involved with this from the end user side of things, because that's very important as a mortgage provider in South Africa. But we couldn't do that before we could solve the stock issue and making sure that there were properties that were categorized as green. And I guess then that's where the conversations started with the IFC and how we could actually assist them with our network of developers in the country. So we had taken the IFC together with ourselves to visit a number of our developers to actually, speak and preach the edge and the green revolution that was coming, the benefits thereof, and the benefits to their customers. And this journey started about 2015. So we had walked this journey quite a long way before we were able to actually launch something that would be customer facing from an end user perspective. So once we were comfortable enough that sufficient critical mass had been achieved from a stock availability perspective from the likes of the various developers, be it the affluent side of things, as well as the more affordable sort of providers in the country, we then went back to the IFC and said, well, we need to then put together a product that would be enhanced, that would be enticing to customers to actually buy green. And so in 2019, we then concluded a transaction with the IFC together with the First Rank Group to make sure that we've got catalytic financing that could actually enable us to pass through some sort of benefit to customers that were going green. So we had solved the problem around the stock, and now there was sufficient stock being put onto the market. At the time of going to market with the product in 2020, at the end of 2020, we had stock in excess of 5,000. So this was now at the critical point. So sufficient EDGE certified properties were available in the market, and we could then, go to our customer base and actually put to them a solution. So in the product development, what we looked to do was to go and find a tool that made the most sense. And because of our proximity to the IFC from the history where we were trying to get EDGE certified properties in the market, it made the most sense for us to go and link our product to EDGE certification. What we did seek to do was that we didn't want to tie ourselves down to one developer, as some of our counterparts have. I'm being naughty, but so we wanted to broaden, because to us it was fundamental to shared value, to making sure that we live in an environment that was climate friendly and environmentally friendly. It had to be broad based. So and we had interacted with a number of the developers. So in our product design, it was about associating the product with EDGE certified properties. And what we did was that we wanted to get as many of our customers to, put pressure to developers. So in a clever way, what we did was that we didn't just give them a flat rate for EDGE certification. We said, if you bought an EDGE certified property and it was EDGE certified level 1, you then got, the lowest benefit, but you got a benefit. And if you got to, the 40% savings range, we then enticed or enhanced the savings. And once you got to carbon zero, we then said that's the Rolls Royce of the offering, and that's where we want to get as many of our customers sitting in. So then there is a synergy between the demand side putting pressure on the supply side, and the supply side then saying, well, there is sufficient demand for us to actually go and put in the extra effort to making sure that we are achieving the carbon zero levels. So to date, we've advanced in excess of 60 million in green-backed, sort of home loans. We've called it the eco-energy home loan from an FNB point of view. The beautiful thing about it was that we're actually seeing customers both in the low end of the market being able to find a green certified property or an EDGE certified property, and right through to the top end of the market. So it's agnostic of any customer base, which is really encouraging. Some of the limitations that we have found, and we're working with the Green Building Council of South Africa as well as the IFC to find solutions around this, is how do we enable properties that are already built, we've coined the term brown properties, to be converted into green properties from a residential point of view. So if you think about it, right now, what we're putting out into the market is nowhere near what's already on the ground in the market. So we need to find a way in which we convert existing properties into EDGE certified or green properties. So we're working with the IFC as well as the Green Building Council of South Africa to actually find a way in which we can actually enable customers to go through their journey. Some of the issues around that is that the cost of certification still remains prohibitively high for an individual customer. So we're talking to the Green Building Council around that and finding creative and innovative ways to actually solve for that property, for that issue. So when you look at our journey, it's been one of inclusivity, and the IFC has held our hand through the process, just understanding the tool itself, being able to be advocates as a bank to our business partners, developers, to onboard them onto the EDGE certification or the green revolution, as it were, has been one of great exploration, and we found it to be really exciting. And as you can imagine, we go to the IFC because we wanted catalytic assistance, but over time we are starting to find that the probability of default or the underwriting benefits of a customer going green is now starting to be empirical. So we're finding the evidence is there. So I think even within our underwriting fundamentals, we're starting to build that into our business, so that we can sustainably provide the eco energy offering to our customer through time. So it's not a case of going back to the development finance institutions to actually get these going.
Great, thank you so much for giving us that outline of this journey, and we're so happy that this product did come to market and that you've already managed to help so many customers. There was one question directly to you about what the average income is required for an African buyer that can afford your green homes. This is from Alke Gijrath. Sorry, please forgive me for mispronouncing your name if I did. Would you be able to answer that, Mfundo?
Yeah, thanks, Lenore, and thanks for the question. So I guess answered differently is that we don't have a minimum income requirement. The minimum requirement is always driven by the price point of the property that one is buying. We have in the market right now a property that's green certified at about 750, and the benefit is that developers have gone the dense route. So with densification, they were able to reduce the price point as much as possible. So that would be what would determine what a customer would then need to earn in order to qualify for that price point. So if you're looking at 750,000 Rand in South Africa, that's typically someone who's earning on their own about 25,000 Rand gross monthly income to qualify for that kind of property. But when you think about a joint application, could then significantly lower the requirement from that point of view. So it's always driven by the price point that the property is available at. Thanks.
Thanks, Mfundo. Now, we have a question for you, Sheikh, perhaps, if you could help with this one. The question is from Saul Nurik. What is the attraction of a green bond if returns are not always attractive when compared to other classes? And maybe I'll put this question to both you, Sheikh, and you, Sheila. So maybe start with you, Sheikh.
Sure. One thing before I answer the question is I actually forgot to mention that in our process, Acorn was actually very helpful to us, because we did get in touch with the team ahead of the green bond, and they kind of give us some of the ropes. So thanks again for that. So I think the premise of I'm not sure I agree with the premise of the question. As I mentioned, we design our building to be a sustainable building that fits the return requirement for our investor. And actually, what you find is we try to make sure that the operational cost of the building, because it's a commercial building, that the operational cost of the building will be as low as possible, because that has an impact on how profitable it is. Because if your tenants have a high operating cost, then they'll pay you lower rent. So what you decrease in these operational costs, part of that you will get in higher rent. And what we've seen is because we have all the numbers here for the shopping centers, we have actually the lowest operating cost of all the shopping center, because we went the optimized and edge route. So I think what I would say is going green is not necessarily supposed to cost more if you look at the ecosystem. At least that's our experience so far, and to us that's the most powerful thing. When you look at the edge tool, and when you do it, and we have another project that we're doing right now where we're targeting the level 2. I don't know if we're going to achieve it. At least we'll get the level 1. you're saying that the recommendations you get are the ones that actually allow you to get more efficient, and sometimes maybe the capex might be slightly higher, but we always do a cost benefit analysis, and so far we haven't been in a position where we have to make that trade-off to say, oh, we have to spend more to be green, but don't see the benefit. So as far as we're concerned, the more green, quote unquote, you go, and hopefully the more efficient you get.
Great, thanks, Sheikh. Sheila, over to you. I think you're muted, Sheila.
Sorry, my apologies. All right. I wouldn't want to overemphasize what Sheikh has said, but in our experience, just the benefit that you get from the life cycle cost saving is a solid business case, because you have reduced costs for your electricity consumption, for your water consumption, which makes for a solid business case. And when you compare that to the capex increase that you have to do, and thankfully the IFC Edge tool gives you that calculation, it's actually very minimal. In our case, it's been 3% to 5% from a capex perspective. And actually, now that we're certifying about the 7th, 8th building, we're realizing that you're able to manage that slight capex increase to almost under 1%. Because then you start to establish certain contracts with your suppliers, they appreciate what you require, and everyone is starting to go into this direction. The other benefit that I think I would mention is we've all had the talk about the net zero transition, which is a global push currently due to the climate change that is visibly affecting the African continent. And I think for us for the African economies, we'll have a lot of stress on our electricity supply, on the grid, on the water supply, and even more critically on the food security. So it's becoming very critical for most of the countries, to start to think from a policy perspective and from a very holistic perspective, what does this climate change, eventually mean to us, to the livelihoods of our people? And because of that, we will soon see changes in policy, and so there'll be issues of compliance that will come into place. And so by going the green route now, what we are able to do is that you're able to future-proof your buildings, from retrofit costs that will come down the line. Because for us as Aecon, we're holding the buildings for, the entire life cycle. So if you look at operating an efficient building in a life cycle cost of about 50 years, 25, to 50 years, and you look at the cost of retrofit that will be required, even if it's not now, in 10 years' time, then you have a solid business case to go the green route. The other benefit that we've experienced for us locally, at least in the Kenyan market, is that the income from green bonds is actually exempt from withholding tax. So you actually are attracting investors to come into that space because the interest income that they earn is actually, not taxed. So I wouldn't say it's an expensive route. From the face of it, it looks expensive, because of the layers of reporting that have to be done, because of the layers of checks that Sheikh took us through, the process of just getting certified, going through CBI, the Climate Bonds Initiative, bringing in an external verifier. The process on the face of it, looks very taxing and looks very expensive. But once you go through the initial process, of appreciating what it looks like, when you go through subsequent raises and when you go through subsequent processes, it is actually affordable. And I think one thing we have to also appreciate is that being, especially for Sheikh and I, in South Africa, you have about 70%, of the African share in sustainable funding. But for the other African countries, we haven't had much going on in that direction. But I think being a nuanced project in the other countries, it's just to appreciate that initially there'll be some blockages, there'll be some barriers, but once these are overcome, we're actually setting the market to make green financing the norm rather than the vanilla traditional bonds, the norm. So I think my encouragement really to everyone is to look at what can we learn, what can we incorporate now, and have a futuristic look, into how we do business and how we look at the future livelihoods and the future generations, way beyond what our businesses are currently. So I wouldn't say it's actually expensive from my experience.
Great, thanks, Sheila, for that. We have some questions from. I'll just take a couple of questions. Some of them I think are being answered by some of my colleagues who are also on the chat, and one of the questions is about. See, so I think some of these have already been answered around the criteria and steps for getting a project to be EDGE certified. A project can be certified also. There's a question from Kahneman about the assessment of the property. Is it before or after construction? So you can get a preliminary, what we call a preliminary certification at the design stage. So it's before construction. You can assess the project to see if it meets the EDGE standard, and then you get what is called the preliminary certificate. Then once the project has been built, you can then have the final certification. Someone will go out to audit the project, an EDGE auditor, to check that whatever's been constructed is in alignment with, still in alignment with the standard, still meets the standard. And if one or two things have changed, as long as it's not significant and the standard is still being met, then you will get the final certification. At the preliminary stage, you are able to market the project as being EDGE or designed to the EDGE standard, so you can then market it as a developer, and this could also help with your sales. So that leads me on to my next question. There's a specific question for Fundo. It's from Manka Sebastian. Asks, how do you envisage green home loans being incorporated into affordable housing for income brackets who use FLISP or government subsidized homes? As this income bracket of 2,000 to 15,000 Rand are the income brackets that have the largest housing shortages. There's a very detailed question.
Yeah, so I don't think that it's an or situation there, it is an and. So we're working with some of our developers very closely to make sure that we comply with the standards of EDGE, regardless of where the property sits, whether it's in the affordable housing segment or in the affluent subsegment. The one big issue is that when you're building a property targeted at the low end of the market, every input cost you can make a tremendous cost implication for the customer at the end of the day, which then leaves us at a point at which which way do developers go right now? Do they go green, or do they go and develop something that's going to be addressing an ever-growing backlog? In the South African context, that sits at about north of 3 million. So those are the considerations. But as I mentioned before, those are discussions that are currently underway between ourselves and the Green Building Council, just to make that more accessible. And I think within the couple of months, we'll come out with something that's really targeted at solving green for the low end of the market, notwithstanding the cost associated with the build phase. But I think Sheila mentioned something very critical, that when something is new in a market, there are many skeptics. Or there are many barriers, and the scale hasn't reached the right sort of scale where the benefit from a cost reduction then is realized. But once it gets generalized and it's more commonplace, you'll see that it then finds its way downstream. So we're also, really hoping that with more and more developers sort of finding quicker ways, more innovative ways of landing developments or projects in an edge compliant way, we'll see these benefits actually trickling down into the low end of the market. So I don't think that the low end of the market is being left behind. The issues are just around the cost associated with landing a property in the low end of the market. Thanks.
Thanks, Mfundo. And just to add to that, in South Africa, we've actually had a project with the Western Cape Department of Human Settlements where we looked at how to certify breaking new ground homes, or previously known as RDP homes. And we were able to actually have the homes designed to the EDGE standard without any additional cost. So in other words, it wasn't increasing the cost of the actual home. There is a certification cost, but not the actual additional cost for going green. And so that project is still underway, and we're hoping that those homes will be constructed shortly. And if that happens, it'll be about 500 homes that will be constructed to the EDGE standard. If that happens, there's a potential for that to be rolled out in not only in the Western Cape, but in other provinces in South Africa, and to demonstrate that you can do even subsidized, government subsidized homes to the EDGE standard. So going green is at all income levels. I think that's the message that we're receiving from the experience of FNB across for your clients, and that we're also seeing across the market. So thank you. Then just moving on, we have a question for Sheikh from Afolabi Siriki. Says, how do you think the prospects for green financing across West African nations? You've been successful in Cote d'Ivoire, but do you see a way to replicate that success in your other coverage countries like Nigeria?
Yeah, I mean, look, so as far as Francophone Africa is concerned, it's one block. So today, whatever we're doing in Senegal, etc., the process will be exactly the same because it's a centralized a regulator if we go and do a bond. And actually quite a few of our the investors in the bond actually came from the region. The majority did not come from Cote d'Ivoire. They actually came from the region, which was very interesting and shows there's appetite. Nigeria and Ghana are a very particular market, but there was actually already a green bond, corporate green bond issued in Nigeria. It wasn't a real estate product, but and when you think about the green bonds, the largest piece of the green bond issuance globally are linked to energy, and the second block is buildings. So from that perspective, I think a country like Nigeria has already seen it. I haven't looked at it in a very detailed manner, but I'm 100% convinced that to the extent that you structure it, you could probably get access to it. And Sheila mentioned something earlier around whether you have the regulations and the framework in place to help you and have additional benefits. So for us, we didn't have the benefits for the investors, for the interest in green bonds, for example, not to be taxed, etc. But I think it's part of the process and part of our job to now push and lobby for some of these global standards to be applied and help all of these the regulators, the governments to align. I think if we just sit back and I look at it from a developer's perspective, just sit back and wait for these regulators, institutions to get it right, it's going to take a long time. So it takes the other way to push and move the lines. And I think as we go, we don't have any plans in the short term because we have other projects in the Francophone area to push, but eventually Nigeria is part of our core markets. So eventually, I think we'll go and try to see how we can access it. But I'm pretty sure you can do it. And the other thing, similar probably to FNB, there is actually banks that have windows specifically for developers that develop products that are green. And I've seen that in Cote d'Ivoire with Société Générale, for example, that has a window. If you come up with a project that is green, then I think it's financed through Proparco, which is a DFI that allows for lower financing for products. So you don't necessarily have to go the full way of a bond issuance, which is, you know, complex, taxing, and long. I think going through directly some of the banks, you're actually able to also access that kind of financing. And, you know, I think you have to go and look specifically in Nigeria, but I'm quite sure if it's not already in place, you must have certain projects. And maybe Lenore can comment. I'm sure IFC as well has similar programs that they're probably looking at to be able to facilitate financing directly through banks for green projects.
Thanks, Sheikh. Yes, IFC is looking at some of those because as an investor, IFC is more at the large scale level, so it's easier for us to invest in banks that will then on lend to developers if they create a green financing product that specifically supports developers who are going green. And I know it's like part of our, because IFC made an investment in FNB, and part of that was also by creating the green mortgage product. They're helping to pull clients to those green homes, and then because there's that kind of demand, you would encourage developers also to go in that direction. Sure. There's another question from this is from Robert Jan Newport, and perhaps you can take this one, Sheila. Greetings, panel members. I still wondering how we can really get access to green building investors for real estate project startups. Just given your experience in the market, perhaps if you could give some suggestions for this participant.
I'm not too sure which country they're coming from, so I'll just answer from a generalized perspective from what we experienced in Kenya. Despite the fact that Acorn has 19 years experience, you know, in real estate and in project management, it's only in 2017 that we actually went the route of developing our own projects and fully funding those, you know, internally, you know, looking for source of funding without having, what do they call, like other partners involved in the project. Because before we were project managers, you know, of projects that belong to other people. So what I realize is as long as you've got a solid business case, you're able to attract investors. And what we did in our case was to start the market shows, you know, and just talking to investors locally and identifying DFIs. Like Sheikh mentioned, DFIs actually play such a critical role in green funding, and to also identify who are the international players who are in your market who might be able to support you in this. If I can just give an example of what happened when we were launching the green bond, being a first offering in Kenya, it was, and in East Africa, so to speak, we expect there might be a bit of, you know, resistance to this green bond because everyone goes the vanilla route. So what we did is that we're able to approach and work very closely with the Garantco, who gave us a risk instrument. So they were able to actually guarantee the bond. And this made it very attractive to both local and to international investors. So I think it's just critical to start identifying how can you de-risk the bond that you're issuing, which partners are available in your market who can be able to support you in that journey. And as Sheikh mentioned earlier, who are the local financiers who already have a green product that's available, who you can start having conversations with. Because as much as the green bonds are about projects that are environmentally friendly, you still have to qualify, you still have to meet and satisfy the other elements, of a traditional vanilla financial bond. Whatever is being backed or the assets that are going to be supported by the bond still need to be solid. Your statements, your books still need to be solid. And also, I think it's just critical to ensure that you check all those elements in terms of how the organization operates, its governance structures, its financial structures, as it is the project that you're actually doing, being able to sell the business case, but then more critically identifying partners, both local and international, who can be able to help you de-risk the product offering to the market. In our case, I would say, as long as you have a bankable project, and Mfundo has talked about it, the financials are willing to come on board. It's just the initial skepticism and maybe reluctance that might be there because of the process. But once you overcome that initial hurdle, I'd like to encourage you, it can be done. The other thing also that worked for us from a local perspective, and Shik and Mfundo have both mentioned, just the importance of the green building councils in the various countries, because we had the Kenya Green Bonds program, which really was instrumental in this. And the Kenya Green Bonds program is backed by the CBK, in our case, the Central Bank of Kenya. You've got the Kenya Bankers Association. You've got Financial Sector Deepening Africa, FSD Africa, who's actually one of key mandate is to encourage funding of sustainable projects, in the African region. So I think just look at what's available in the country. If the country that you're coming from doesn't have an active Green Building Council, you can connect to the World Green Building Council and also reach out to IFC, who would be able to, lead you to the correct partners to work with, and then go through the process. And also, we're available. You could reach out to ACON, and we could be able to just walk the journey with you.
Great, thank you, Sheila. So our next question is from Mfundo. It's from Dennis Kwanzaa. He's asking, will FNB extend this green building product to other subsidiaries across the continent? That was also one of my questions. Is this something that you envisage expanding to other African countries?
Thanks, Leno. Yes, we are in the process of talking to our subsidiaries, chief amongst them being Ghana. So Ghana has shown keen interest in the experience that we've gone through, and I think the minute you're able to find synergy between developer, a DFI like IFC helping you in that region, it then becomes an easy play to launch the green home loan. I think the green home loan becomes a byproduct of all the other elements being in place. If we've got the properties, if we've got a credible green building council in the country to help you through the process, and a trusted partner such as the IFC helping you through it, all of these fundamentals then come into play, and then you create an ecosystem for the property. So as long as we can create those elements in the various subsidiaries, I think there is, to Sheila's point, a business case for it. And some of these, Sheila spoke about all the things that some of the developers and some of the players need to get in place to be able to be supported along the way. Lenore, you would know the benefit that the African Union for Housing Finances conference have had in making sure that we can create benefit and support and networks that enable some of these conversations to go ahead. We heard about the Edge tool from one of those conferences, which are very important then to creating a sustainable housing market in the African continent. Thanks.
Great, thanks, Mfundo. So, Sheikh, over to you for the next question. It's from Guido Giachetti. That's one of the big developers. For large commercial properties, is the differential of interest costs and tenure on the bonds, is there a differential?
I guess I'll answer it in two parts. I think so. If you compare the loan that we had in place, so the construction loan, to the bond, there was 150 basis points difference. Now, how much of the 150 basis points is purely commercial, based on the fact that you remove construction risk and now you stabilize, you're generating cash flows, etc. Is one that you can argue, but we've seen a significant benefit from that, from moving from a construction loan to a refinancing position. Now, the difference between whether everything being equal, you have a green bond and a regular bond, and whether you're getting a significant discount, I don't think there's enough empirical data today to be able to truly say it. I mean, if you approach it from a purely intellectual perspective, because it's sample size, timing to market, sizing of the issuance. So you have all the commercial elements, and then you need to add the wrap and see how much the wrap is going to give you, whether it's 50 basis points or less. There's no comps for us, right? This was the first real estate bond issuance in the whole region, right? So there's no comps. And there's a difference in the tenor. We're 8 year, we're able to push the envelope, whereas most other issuances are 5 to 7 years. So there's just a lot of noise, and we cannot say it from a definitive perspective that and quantify what that premium is going to be. But what I will say though is we're moving in a world that, everything else being equal, I think more and more the institutional investors will go with projects that have that wrap, and I think we're moving to a world where that's actually going to become the norm, and more and more, and we're seeing it. You have some that say, well, you need to have certain type of credentials for us to invest with you, and it kind of also opens up the world of investors you can have access to. So investors that wouldn't, especially investors from a global mandate, that would not necessarily come and invest directly into your project, suddenly, because you have that green wrap, they will be able to come to you. So it gives you access, I think, to a broader set of investors globally by having that wrap. So I wouldn't just analyze it with the prism of whether there is a discount that you're going to get from it, and I'm not even sure that from a global perspective that's fully the case. I think it's a question of everybody realizing that climate change is not just a talking point, it's not just a nice thing. It needs to be built into, and action needs to be taken, so that we actually have a more sustainable financing and projects in place going forward.
Great, thank you, Sheikh.
I think
go ahead, Sheila.
I just wanted to add one little point to that. If you look at the West and the European region especially, all these elements that we're talking about have already been incorporated in their policies, So for them, it's actually about compliance. You don't have a choice whether you develop green or not, because with the rising global temperatures, it's becoming a reality, that people have to start living with and facing, and start figuring out how do we ensure that we still have a fruitful earth, so to speak, that we live, for the generations after us. And as Sheikh said, if you ask me, African economies will soon follow suit. Maybe not now, not in the next 5 years, but at least in the next 10 years, because we have to start thinking about other bits, of for the survival of our populations. So I think it really is going to be the route. If you look at how it's been rising, before during the initial raises, you had about just 200 million in green bonds, globally. But as at 2020, we hit the 1 trillion mark, in sustainable funding. Currently, we're at 1.7 trillion, in sustainable funding, just linked bonds that are linked to sustainable funding, whether it's bonds, loans, all green products. We've actually hit the 1.7 trillion mark, and the prediction is that by next year we should get at about 2.3 trillion. So it is actually going to be the norm rather than that other thing that you do. So I think it's important for all of us to just have a positive outlook and start thinking about it from a futuristic perspective and jump onto the whole green development and green improvements in our communities.
Thank you, Sheila. And our next question is, I'll give over to you, Mfundo. It's from Comfort Jumbe. What's the landscape of brown building conversions to green buildings in terms of viability, property owner participation, certification impediments, and future prospects? I think you mentioned some of the certification impediments, but perhaps you can address some of the others as well.
Thanks, Lenore. Look, from an SA point of view, I think we are still very much at an infancy stage in terms of individual customers converting their properties to green. But I look at just the discussion points around sustainability. Where we work, our discussion points around that, it is becoming commonplace discussion points. So we are starting to see customers, starting to ask about alternative building technologies, which are seen to be more green, right? But with all of those changes that customers could potentially be affecting, the issue then becomes, are they going to be then certified in a way that is recognizable? In our case, we do recognize EDGE. So we are still finding that those two elements are not converging at the right place right now. The certification impediment is one that is something that is a thorn in our side, and we're actively trying to solve that for our customers to make it more accessible. Because when you think about a project with in excess of 100 units being built, the cost can be spread up amongst the units, and the economies of scale then make sense. But if you are, one customer converting one property, the complexities are then, there isn't a standardization, a standard of build. Even if we group a couple of customers together, who then could benefit from economies of scale, but the complexities and the nuance in each of the properties then add some complexity. So these are some of the issues that we are leaning into to try and solve for brown properties converting. But like Sheila said, it's not going to be a nice to have for any much longer. It is going to be a legislative requirement, and it's going to come first to the banks, and then it's going to come to developers, and then I guess as the world moves more green, we can't leave behind those customers who have actually opted for property ownership prior to the Green Revolution. So I think it is front and center for us to try and make sure that we do solve that problem for customers before it becomes a rush. We don't want customers rushing and starting to do things in the incorrect way. So we want to incentivize them. We want to make it as easy as possible. So I think in the discussions with policymakers, because we're also discussing these items with policymakers. So policymakers to regulators, as well as ourselves as the banking fraternity, have to lean in and make these more accessible to customers. I hope that answers the question.
Thanks, Mfundo.
Yeah, and maybe just one thing to add to that, to what you just said. I do think also that from a customer perspective, we shouldn't underestimate the fact that customers, and whether it's users of these commercial buildings or buyers of these homes, are actually also part of the story here, because they're also demanding directly and indirectly that we have more sustainable buildings. We're seeing it. We recently created earlier this year a residential property development business, and part of what we're doing now is positioning some of the new developments as sustainable communities with some green elements. So the customer is not asking you specifically to live in a green area, but some of the things that they are asking for and willing to pay a premium for are actually things that you need to do to create a sustainable communities, whether it's the green areas, recycling water, if you put solar, this, that, and the other, having the houses better insulated, having solar water heaters, and all of these things are commercially viable solutions, actually, and you're seeing it more and more, something that the customers are asking for and willing to pay a little bit more for. And I think over time, it's also going to become part of the story as part of the market standards that people want to live in, irrespective of whether you're on the higher end of the spectrum. Because the mistake that we make sometimes is think that because people have less money in their pocket, that they don't care about standards. They absolutely do, and within their price point, they want the best that they can get.
Thanks, Sheikh. That's also been my experience. People who might have a lower disposable income, they can be very, very discerning customers, because they feel that if I've got this smaller pool of funds, I really want to make sure that wherever I'm going to put that money is going to get me like the best value for me. So actually, they can be sometimes even more discerning than other customers, because they're like, really, okay, I've got this, but where am I going to put it? And do I really want to move into that house, or I can continue to stay with my grandmother until I get the house that I really want?
Exactly. 100%.
So, yeah, that kind of thing. So thanks. I think we're going to start wrapping up. Maybe if you could start us off with closing remarks, Sheila. Anything that you would like to leave our participants with?
Thanks, Lenore, for a fantastic session. I've enjoyed myself, and thanks to Mfundo and Sheikh. It's been a wonderful session. I think for me, what I would just like to encourage everyone is the first step always seems like the most difficult step. But once you overcome the first step, it becomes easier as you carry along. And currently, IFC with the Edge tool has actually made it very, very easy, for all of us to be able to get our properties to be green. And the beauty with the Edge tool is that it's a platform that you can actually just go in, try out, and start seeing what improvements would you need to make, what can you change, what can you play around with to make sure at least you get onto the first step of getting Edge certified before you become a bit more interested in getting into the 40% and to the net zero bit. So just encourage everyone, get over the first step and let's get into this, because this is about future generations. And I think the second thing that I'd also just like to talk about is we have to just continue creating awareness, as financiers, as developers. It's critical that people understand what this is, because every time you talk about sustainable funding and green funding, it looks like this big, interesting, complex thing, but really it's not. It's similar to a traditional financial instrument, just that the projects that are being backed have positive environmental benefits. So I think let's normalize conversations around greening our environment, greening our properties, and beyond that, greening our communities, because if I have my building as green certified, but everything around me is not a green building, then we don't really make impact, And for most investors, we're now moving towards way beyond just checking the list. It's about impact, creating impact for our communities, impact for our generations, impact for people around us, and just creating environments that are wonderful, for people to live in, to work in, and to thrive. So for me, it's to just encourage all of us to get into this space of green construction, whether it's from the real estate perspective or an infrastructure perspective. And let's push this to get the most benefits from it. And it's only when you have the mass going down this route that then we'll be able to convince the likes of Mfundo to give us much more affordable funding for all our projects. So it's been a pleasure. Thank you very much.
Thank you so much, Sheila. Definitely, it's been a pleasure. If you can continue with the wrap-up comments, please, Mfundo, and then we'll close with Sheikh.
Lenore, API and IFC and the Edge tool, thank you very much for an insightful and engaging conversation. Very important topic, I think, that we have to put front and center as we build a more sustainable world, for future generations to come. I do think that it's been a very, very interesting journey that I would love to continue in building these innovative products for the future. Sheila, we are hard at work making access to finance more accessible, both from an end user finance perspective as well as developer finance. I did neglect to say that part of the funding from the IFC did actually go to enabling developer finance for green and EDGE certified properties as well. So I think ours has always been, because we're a commercial bank, we had to always try and leverage both sides of the market, both demand and supply side. And I don't think that we can ever do it right if we don't, focus on both sides of the spectrum. But yeah, I look forward to many more discussions such as these. I think it's going to be, the norm rather than the exception for us to talk sustainable banking, sustainable development, sustainable living. I'm reminded, when cell phones became, the new buzzword, everyone thought it was a gimmick, and now it seems ridiculous that you still have a landline, and I imagine that a green home will become, or a green building will become so commonplace. That will become the vanilla, offering, rather than what we now call the vanilla offering, and it's great to be a part of that revolution and to be central to that revolution. So, IFC, thank you very much for the innovation and for the invitation.
Thanks so much, Mfundo, for all your comments on the green revolution and making that, spreading that out to everyone. So, Sheikh, if you'd like to close for us.
Sure. First off, obviously, thanks to the IFC and API for organizing the event, and thanks to the Edge tool that really made it very easy for us to be able to have that conversation, given how dynamic the tool is, and it's truly a game changer. And I think IFC really played its role by creating this tool and kind of helping create the platform that we can now leverage and move forward. The second thing, and I'll go back to one thing that Sheila said earlier that I think is very, very important is about, she talked about future-proofing your buildings. So, what I recommend and encourage everybody on the call here to do is to be part of the future, right? Because this is the future. There's no going back. It's not going to be a nice to have. The real question is how long it's going to take for that to be the case. So if you're developing new assets, make sure your building is future proof, and make sure you're part of the future. You don't want to be the one making a large investments today, whether it's your home, a commercial building, a hotel, or whatever. and in 5 years from now, being behind. So now is the time to get on the train, and I don't think the train is going to stop. It's an exciting journey, and ourselves, we're working towards taking making the zero carbon pledge. It's a big step. We're trying to see if we're actually going to be able to sustain that. So probably next year or the year after that, I think maybe we'll be able to actually make that pledge. But that's what we're doing now, and all of our property developments are going to be EDGE certified. That's at least the one thing that we've decided to do, at least to try to make them EDGE certified, because we think that that should be part of the norm going forward. And to close out, on all of this is, very often people have always thought, being green is more expensive and needs aid and it's not sustainable. Well, in our experiences, and I think it's the case for everybody on this panel, it's not. So hopefully we can break that barrier and approach it in a more commercial manner, and seeing that we can be green and actually be economical and create great returns for the various stakeholders that we have in our projects. So thank also to the other panelists. It was fantastic, and hopefully we'll keep the discussion going.
Thank you, and thanks so much to all of our panelists. Thank you for your very insightful contributions, and I think the key message that's been coming across is that this green train, as we were talking about, the green train, it's moving, and we welcome you to jump on board with us. And we, from some of the figures that Sheila was also quoting, it's really expanding from around 1.7 trillion US dollars globally in terms of sustainable finance that's going around the world. So really, if you want to take your project into the future, it needs to be green. And as you do that, there's a whole world of finance that could open up for you. And I hope that you've seen that through the experiences of our panelists. And thank you to all of our participants for your participation, for your questions. And yes, please keep in touch. Thank you to API for their support and for organizing this. Thank you, everyone. Bye-bye.
Thanks.
Bye-bye.
Bye-bye.